Hi, everybody. Today is October 12th. I'm here with Ben Hunt, who is a dilettante farmer.
Exactly.
Exactly, right? Is it Reading? It's Reading, I believe.
Yeah.
Reading, Connecticut.
Yeah, way out in the woods. Yeah.
And it's not often that we get to meet people who are educated in the markets as well as a farmer. Ben spread, he sits at the bottom of a giant ridge line in between a beautiful reservoir, the giant reservoir, and and I guess we could say the beginning of the mountains in Connecticut, where there are plenty of wild animals, mountain lions, bears. I saw some wolves on my bicycle there, and so we're all very honored to have Ben, and who has helped all of us over the years, and we've never really had a chance to say thanks. So thanks, Ben. That's great. Ben's most recent letter is about the UK and can it happen here? And I think that's where we should start. Before I start, and I have to say that this is the Misfit Happy Hour, and it's brought to us by Sanlucci, the people who have Rancho, Wall Street Jesus, and Lucci himself, all running their own educational programs. And I highly recommend their stuff. And so with that, without further ado, our esteemed guest, Ben Hunt, it can happen here, I think, right, Ben?
Yeah, absolutely it can. I mean, we should, dig into it a bit. I mean, it's a little bit, the vulnerabilities of our pensions are a little bit different than the UK pensions. I mean, they're just so screwed up right now. But the underlying issues here are absolutely the same. They're absolutely the same. And the underlying issue, just to kind of, so we don't step on the lead here, right?
Right.
Is that they've all turned themselves into hedge funds where, they're the ultimate long-term investor and they shouldn't have to worry about mark to market this or mark to market that. But they've all turned themselves into liquidity starved, daily marked hedge funds where they can't make their freaking margin calls. And, the variation margin's killing them. And the same impetus here, the sort of transmutation of their book has absolutely happened here. So I'd love to kind of talk about that. And
yeah, I mean, how much time do you get? How much time do you get for a margin call? Like as traders, we don't get a lot of time. It seems like, is it a negotiable?
No, it's not negotiable. No, right. I mean, you get the email in the morning and, if they like you, and I'm sure they like these guys. I mean, right. It's an EOD thing, but
is it the clearing firm
that number?
Is it the clearing firm that sold them this, or is it some guy who just walks in with his briefcase?
No, it's so the UK pension fund saga. So we're talking about 1.6 trillion in dollars.
That they have 3 days to move around.
Yeah, it's crazy. So 1.6 trillion, and they did some, I call it reforms, right? So yeah. This is right before 2008, where if you're a private pension fund, you basically became a public pension. The corporate pension funds that we have here in the States, they're all essentially public pension funds. Right? So they're all consultant driven. Every last one of them is consultant driven. And all of them have adopted some form of LDI, liability driven investment.
Levered.
Oh, for sure. Because so the whole notion of LDI is that you're focused on your pension liabilities. And so a pension liability is like any book of obligations, right? So it's the pension fund's obligations to the pensioners, right? Mm-hmm. It's a promise,
right,
to pay them back more money in the future. Mm-hmm. So it works just like any bond, right? So as interest rates go down, the value of those promises that you've made to pensioners goes up. So right. Your liabilities go up,
right,
as interest rates go down. As interest rates go up, your liabilities go down. So you think, okay, well, what's the problem here? I mean, interest rates have gone up. So their liabilities have gone down. What's the problem there?
Yeah.
Well, the problem, of course, is that we've had 30 years of interest rates going down, i.e., liabilities going up. And so all of these pension consultants have sold the UK pension funds on this idea of, hey, guys, we're going to hedge away your liability risk, right? And
Being
your
underfunded.
liabilities go up as interest rates go down. So we want you to be, long. Right? We want you to be long these gilts, these long-term gilts. You want to be long the 10-year, you want to be long the 30-year. And this is the other real structural problem with the UK market. There's just not enough depth in those long-term gilt markets. That's a big advantage that the US has, right? There's a lot more depth in our 30-year and certainly our 10-year and these kind of longer-term tenors. There's just not much depth there. So you've got $1.6 trillion worth of pension managers who are falling over themselves to buy, the 30-year gilts, right? So they've structured it now as an interest rate swap. So they do repo and they do interest rate swaps, right? To your point. So it's leverage,
right?
So that they can do their other investing and still do this liability hedge for interest rates continuing to go down. And so it's just a straight up margin call, Chris. It's a straight up margin call when interest rates spike, when those long-term interest rates spike.
And then so there's no one in a rush to take that problem off their hand. So it is
right. Well, but Chris, it just continues. Anybody who's traded for a living,
right,
understands that. Look, all of traders, and I consider myself a trader at heart as well, right?
That we do.
When you smell blood in the water, right? When you see, of course you're going to go in. The only buyer for these long-term gilts ever have been the pension funds. They're the only buyer. They're the only buyer in the world for this stuff.
Whoops.
And so now they have to sell. Now they're forced sellers of a thing where they're the only buyer. And so what happened when, was it like 10 days or so ago now, when, the
gilts fell out of bed,
right? So when they announced this insane, tax cut and spend program, there were no buyers. There were no buyers for long-term gilts that had to be sold to make a margin call. And so that's when the Bank of England first stepped in and said, all right, we are the buyer of last resort, which is what central banks are there to do. Right?
Then how does Carney come out and threaten that he's a buyer of last resort, and then he's threatening him? You have 3 days. That's a clown show.
It is a clown show. It is an absolute insane clown show. Right. So you saw 30-year gilts. Now they're back over 5%.
I saw that, right? Like the bailout. It's, in other words, if you get a bailout, that's your one window to get out as a trader, right? If you're lucky enough to get a bailout, and you just have to get out.
And this is the problem, right? Because you've got these LDI programs that have been structured with these UK pension funds. These aren't things you just unwind in 3 days.
You can't get out.
You can't get out. You can't get out, and yet, because your
what's the hedge? Is there a decent hedge or no? No, there can't be, because it's too complex.
It's your currency, right? You're a UK pension fund, so you've got to take these positions. You're totally stuck in them,
right? And you're underfunded, right? You need the leverage. You needed the leverage.
Chris, the pension world is so screwed up. Because I promise you right now, what the consultants are doing is they're saying, oh, well, risk assets have, taken this big hit. But, rates are up, so your liabilities are down. And now our return projections, our projected rate of return, well, that's up because, we're down. So don't worry, guys, we're going to make it up.
And the whole don't they run that 60-40 model, which has gotten destroyed?
Well, this is what we need to talk about for the U.S. right? Because it's not just the U.S. pension funds, and we can talk about the differences. And there are some important differences with U.S. pension funds. But more broadly, Chris, look, I mean, look at every RIA in this country, right? It's all some variation on a 60-40 theme. Every one of them is some variation on the 60-40 theme. And
my next question was, the people who have that conversation should record it with their RIA.
They should, but so let's talk about the U.S. pension fund, structure for a second, because it is different. It is it's different in terms of
the currency, right? The liquidity.
Yeah. So our long-term treasury market is a lot deeper than the UK. So that's a help.
Right.
And the other help is that in the US, you have a couple of things. One, you've got strips, right? So you can actually strip out the rate component from the bond component.
Yep.
Right? And so in an unlevered way, you can just get your exposure, your liability hedge.
Mm-hmm.
In an unlevered way, you're just buying these strips. Right?
Who makes the margin on this? The clearing firms?
Yeah, that's a really good question. I assume it must be.
What is it? Somewhere around 20% in case of, it's just like in the collateral chain thing. It's just like, well, you're good for it, but we're not sure who you other sides are. So,
well, I mean, I think the initial margin on some of these interest rate swaps in the UK is probably like 10%. I mean, my fund, I pay 20%, initial margin. So, but I'm not a pension fund, right? So, it's the initial margin. I don't think it's crazy.
Mm-hmm.
But for the U.S. pension funds, right? You've got a deep treasury futures market.
Yeah.
But
theoretically,
theoretically, right? And so when I think about just focusing on the pension funds, right, for a second over here, so long as the Fed is large and in charge, right? So long as the US dollar is the USD, right? So long as it's the thing, then it's no fun for pension funds because they've gotten less and less liquid, right? They've all gone into alts, they've all gone into privates, right? So they've got their equity book, that's the only source of liquidity. And at the end of the day, and this is one of the first lessons I learned when I was trading the European financial crisis, is that a bank, this is true for pension funds too, banks and pension funds can be insolvent, underfunded forever, right? You can be insolvent forever, right? But you can't be illiquid for a second. You can't be illiquid for a second.
Who pulls a trigger on the illiquidity switch, so to speak?
Well, so that's why banks and pension funds are liquidity takers.
Yep.
When you have events like this, they are liquidity takers.
Yep. So
I'm willing to bet we've got a fair number of people, listening here, right, who have a business model in one shape, personal business model, company business model, or whatever, that relies on banks and pension funds, call it institutional investors, as their source of funding. And that's a hard place to be right now, because it's a global margin call that's happening right now. Everybody is looking to, hoard the cash.
Is it trigger the VIX just because you can sell your stocks at first? The first thing they'll liquidate is the stocks because they can hit the bid. I mean, what is the trigger for the margin call? Who makes that call?
Well, but what you're already seeing is margin calls or gates going up, right? So let's say I'm running up, a commercial real estate fund.
Right, you're cut off.
You're putting up the gates right now, so you're restricting any sort of redemptions as most you can. Yep. And this is what the problem is for the banks. This is the problem for the pension funds, liquidity takers. They must be liquid, And so they are pulling money from every source they can. Right. So, the multi-asset managers, you're
Yep.
seeing, massive redemptions hit those guys.
Yeah.
The privates have all got their lockup periods. So, and they're making calls, right?
Yeah.
You're
You can't hit the mouse and sell your shopping center.
all right. That's right. That's right. So, we've seen these periods before, those of us who've been
Yeah.
around the block long enough to see
Yeah.
them. And this is absolutely triggering another one. Right. I mean, I go back to, 95, right? And, but you saw exactly the same thing, the same shit happen when you had, the Mexican crisis,
Okay.
right? You had the
The Thai
Thailand,
bot, right? The Thai
right?
bot.
Remember
Yep.
that? But
Even
the way,
long-term capital, there was something about that.
for sure, right? 97 long-term capital management. And the reaction here, the universal reaction by every bank, every pension fund, every asset manager is to hold on to your cash, right? It is a liquidity squeeze.
I mean, you can't argue. You can't argue with risk, or you can't argue with the margin
Oh
call.
my God, no! You have to do that. That's right. You
Right.
can't argue with the margin clerk, right?
Right.
And so it's everyone who's got a business model, and most of us do, frankly, of in one form or another, borrowing short and lending long,
Right.
right?
Right. Yeah. Selling
And
more
if
at
you don't
higher
know what that
prices.
means, if you're listening to this call, you don't know what that means to borrow short and lend long, you need to learn it because your business model is probably that.
Yep.
And your business model gets killed in situations like this. So you've got to hoard your liquidity. You've got to keep your lines open. And you have to understand that the bank, your funder, the pension fund, right, that's, giving you money, for your hedge fund or whatever, they want it back right now.
Yeah.
They want it back.
Yeah. You have to be able to provide it back, or you're just done. You're just done. They'll never do business with you again.
You're right. I mean, it's for so long, right? The kiss of death with any sort of fund was putting up gates, right? You do it
Yep.
once, and you're a broken teacup. You can glue. That's the thing, right?
Yeah.
You can glue a teacup back together, but it's always going to be a broken teacup. And that was absolutely the issue with every fund manager is once you put up the gates, nobody would ever fund you again. That's gone away a little bit, right? When everybody put up gates, except me and my fund, I never put up gates. All right. So, but once you put up gates, right, it still does. It's just a black mark that is just makes it so much harder to do anything in this business ever again.
What's the order in which things get liquidated? The most liquid stuff goes first, right? And then if they actually execute a margin call on you, they do so at the market. They don't wait for any sort of favorable market conditions. They just blow you out.
They just blow you out. They just blow you out. And they take some glee in it sometimes, right? So
yes, or they're just surgical. They're just like out it goes. And then the idea is that they won't ring a bell. They won't tell us. It'll just be in the price action that we'll start to see it, right?
Well, and that's right. And that's why when you get announcements like what's happening in the UK, where it's obvious what happens, it has to happen to rates. And it's obvious now that these funds, what's most liquid, yes, equities are the most liquid for them. But right. I said, if it's tied up in, some private deal and you can't get it back, what have you got to sell except your bonds?
Out those go, right? That's the collateral. They got to go.
And that's when you smell blood in the water, and that's when there are no buyers, and that's when. Right.
And especially now because the markets are so fast, right? And it's going to take time to find a buyer. No buyer is coming to the rescue. So it's possible
well, the buyer that comes to the rescue is the central bank.
Right.
And so, frankly, I mean, that's why, in our fund, we got out of our, we call it a global macro strategy, right? So we got out of all of our UK, all of our gilt positions, even though we thought they'd do well in this environment, because right. once the government gets involved, and this is really true for FX too, I mean, it's true for everywhere, but it's most true in FX. It's clearly true in rates. I mean, I don't have an edge, and I don't have the staying power of Soros and Druckenmiller when I'm trying to stare down the Bank of England. That's
Right.
just not my game, and I'm willing to bet it's not the game of anybody listening on this call. Right. So when it goes over that kind of event horizon where the government becomes
The buyer.
the sole buyer,
Right.
I kind of get out, right? Because then it's just a political utility. So, the Japanese bond market.
I was going
right?
to say 4
Did you,
days. 4 days.
4 days. There hasn't been a trade,
Right.
right?
4 days.
Because the Bank of Japan owns all of it. There's
I mean,
nothing to trade.
It begs a question of price discovery, but
Well, look, Chris. I mean, this has been the for me kind of one of the defining issues of why I can tell the story about my hedge fund. I'm a short seller at heart, and all of that and all like that.
mm-hmm.
But what happened, right, with QE, and look, I think QE1 saved the world. I think QE2, QE3, QE infinity, the non-crisis use of quantitative easing, I think that's broken our world.
There was a great newsletter you wrote about the GDP net worth versus the
wealth versus the growth of the economy.
Yeah.
Right. So people with money got richer at a faster rate than we grew our economy, and that difference, the slope of getting richer through financial assets, our wealth, accelerated even as the GDP growth went up pretty much in a straight
creates a huge monoculture of people.
A lower slope, right?
Right. And now all of a sudden, an entire generation of wealth managers doesn't know how to function in this environment.
It's gone, right? So it gets back to your question about price discovery.
Right.
What we had was global central banks essentially turning the equity market into a political utility.
And the collateral for their for whatever system they were running.
All the liquidity sloshing around, right?
Yeah.
So when the tide goes out, when it's no longer being managed as a political utility, this is the world we're in now.
Right. And all these people,
right?
All these people who thought you just owned everything and the Fed would bail you out forever are now writing us emails saying, when will it stop?
My favorite. So, most of the people on the call know who Stanley Druckenmiller is.
Yeah.
Right. So, famous, he and Soros were the guys who broke the Bank of England back in the day, and
they had a direct line installed.
Exactly. Right. So a famous investor, and Stanley, smart guy. I like what he says, and but he's like so many of these guys where, his fund, right, you turned it into a family office. Why? Because, performance sucks because you can't.
Yeah.
You're not in sync. But anyway, Druckenmiller was, this is I've never
you're not, time out. You're not in sync. You just use the word that is the sentence right there that we need. That's the mantra, right?
Right. So anyway, so Druckenmiller is he's a big critic of the Fed and QE up until Q4 of 18, when Jay Powell, he starts raising rates and he starting to shrink the balance sheet, or talking about shrinking the balance sheet. And so we got that gruesome, bear market in Q4 of 18. And so I still remember this day, Druckenmiller comes in and says, well, I think I really didn't mean for you to do all that, right? I know I was a critic.
Right. Like we were going back to the Stone Age in December of 18. It was dropping so fast.
So it was, there's this great line from St. Augustine, right? Who was, before he became a saint, right? He was, a young man, he lived it up. And so his famous line in his Confessions, right? So how he, came to be the saint he was, yeah, I was living it up in Rome, and my line was, Lord, make me chaste, but not yet. right? So that's the way it's been. Everybody say, oh, yeah, the Fed, QE, blah, blah, blah. And then they actually start to change what they're doing. They say, no, make me chaste. I want you to do this, but not yet. right?
Hey, is the Fed trying to deflate this thing slowly by keeping their foot on the VIX?
I don't think so. I think that you get to a point in your life, in your career, I'm talking about you become, president of the United States, you become chairman of the Federal Reserve. There's no promotion from there, right? And when you get that position, your thoughts become, okay, how are the history books going to remember me?
Good point.
Right?
Legacy.
Because you're not aiming for another job, right? What you're
Right.
aiming for is that you don't go down in history as the guy who fucked it up.
Your legacy, right? That's important.
What's your legacy?
Yeah.
What's your legacy? And right now, clearly, and I wrote a lot about this, the whole notion of inflation is transitory. What a colossal error. What a colossal error. And so Jay Powell right now is the guy who let the inflation genie out of the bottle. And he'll be damned if he goes down in history known as the man who let the genie out of the bottle and couldn't get it back in. He wants to be remembered as the second coming of Paul Volcker.
Volcker, right.
Right? And so that's why he had, I'll use a $10 word, an amanuensis. An amanuensis is your scribe, right? So his scribe is Nick Timiraeus in the Wall Street Journal.
Right.
So he's got the pipeline. So an article is published in the journal. Used to be John Hilsenrath.
Yep.
Now it's Nick Timiraeus, right? So it's coming from on high. And so, he basically dictates an article for Nick to publish called, channeling Paul Volcker.
Volcker, remember that? Like,
right? So look, that's how he wants to be remembered. He is not going to be remembered as,
but he can't.
Arthur Burns or somebody like that. But he wants to be remembered as Volcker.
But time out.
Yeah.
Volcker was coming from 15% short rates, and
I know.
And now we're still you can pick the number. We're way low under real rates.
Way under real rates. And this is my take on Powell is the same as my take on Alan Greenspan, which is that they knew better. Right? I have a different take on Bernanke and Yellen. They're zealots, right? They're just academic zealots, right? But Greenspan and Powell, they knew better. They knew better, and yet they did it anyway.
They did it, yeah.
And now Powell is thinking, shit, I'm going to go down in history as, the new Arthur Burns or somebody like that. And he's like, no, I'm going to do, again, to use a Mario Draghi line, right? Whatever it takes.
Whatever it takes.
Whatever it takes. So I'm not remembered that way.
Well, it seems as though people then are.
Even if it breaks the world, which it will.
Yes, it should. But certainly the VIX has underperformed in regards to the protecting people per se. In other words, the puts have not protected people in this drop. And the 60-40 has not protected people in this drop.
Well, it's the 60-40 not protecting people that I think has got more lasting impact, right? Because that's the RIA world. I mean, and I'm a trader, you're a trader, right? We're all want to talk about trading stuff, but the real world is the world of voters, right? And the real economy,
right?
That's the RIA world, right? And it's the pension world, it's the RIA world, and there's never been this bad of a year. And when I say never been this bad of a year, I mean there's never been this bad of a year. So
the pension fund guys.
VIX,
yep. Oh, go ahead. Sorry.
I know what you mean, right? I think that so a lot of the research we do and our whole strategy and the way we work is, I've got a lot of opinions on shit, right? But the actual investment is a systematic strategy where we look at the narratives, where they're waxing and waning. And what we've had throughout this year has been a lot of missionaries, that's what we call missionaries, people who
Right.
get in front of a camera, behind a microphone, shake their finger at you and tell you how to think about the world. And so that's, Wall Street guys, it's politicians, central bankers. And this idea that there's still a soft landing that can be stuck here, that is still a very prominent narrative that keeps going out there. And it's a narrative that is, in my view, designed for an FA, an RIA, they're managing big, lots of money, right?
Yeah.
But they want to have a conversation with their clients that, it's not the end of the world. They're not going to talk about a liquidity crisis. I don't know. I mean, that's not a conversation you can have with the doctor who's got, a $2 million portfolio with you. Right? You don't talk about liquidity crisis. You talk about it's going to be a soft landing, and we'll pull this out.
Is it still a 1% wrap, or have they knocked that down?
It's down a lot. There's been a huge fee compression. The only guys who don't have fee compression are insurers with their annuity contracts. I was looking at this. It's unbelievable the pricing they have on some of this annuity stuff. I mean, anyway, that's a whole nother subject, right? But yeah, no, there's been an enormous fee compression.
Right.
But a lot more competition, fee compression.
And now here comes the conversation on year end about what are we doing next year? What's your answer?
What are we doing, right?
Right.
So every FA, every RIA is having this conversation. Every pension fund board is having this conversation. Every nonprofit foundation and family office is having this conversation.
And they're smoked.
They have been smoked this year, Chris. And the larger groups are still hanging in there by their fingernails on the basis of their privates, because the private portfolio has not been marked down. It just hasn't. So they're just hanging on their fingernails.
Can you imagine a forced liquidation into this weakness? Oh my God.
Well, so that's why I keep thinking about, what's the contagion from a global margin call? And it won't be the same here as it is in the UK.
Right.
But, I was talking, so like I said, I'm a short seller by nature, right? So,
Me too.
So Jim Chanos, right? So we all know Jim.
Yep.
And he's been pounding the table on this a little bit. I got to say, I agree with him. You want to look for a fuse, right? It's commercial real estate. I mean, what? You refinance at cap rates today, the equity in that deal is wiped out. The equity is gone. And I don't know, Chris. I mean, it's
right. I mean, it's the obvious canary, but it's not liquid. So, I mean, how are you ever going to, it'll just be one guy first has to sell whatever he's got, and then the next guy, and then the next guy.
This is where we are, Chris, right? Which is that the holders of this shit, and I'm using that in a non-pejorative way, right? Just as a pure, descriptive sense, right, of what happens to these assets if you have to refinance with this cap rate and your equity gets wiped out. Yeah, is extend and pretend, which is a time-honored technique, right, of preserving your book.
No, rolling out and up hasn't worked for most of the people who've tried.
Extend and pretend. The problem with extend and pretend is that everything has been securitized. Oh. And when your shit is securitized, it gets marked and you get the margin call and you got to pony up. So, what breaks all this, Chris, is if, we have, so I can comfort myself that it doesn't break at the foundation so long as the US dollar doesn't break. But my real concern is that This is like the summer of '08.
Yeah,
Right? So Bear goes out in
3 days.
March. Right. So you start getting it in March, right? So it goes out at the end of March. By the end of May, the market is back very close to it to its all-time highs, right? Because the mantra was, systemic risk is off the table. Bear was just this, one-off bad actor. Everyone else is fine.
AIG is short 1 billion CDS swaps.
I can see the same thing happening again, Chris. I really can see the same thing happening again. And then what undid everything was the realization that, so the book is not good, right? That there is a real economic nationwide decline in home prices, and so that the bank's book is not good. And I think
Now,
the same thing happens here if we start to get what I'm seeing, right? We get through the midterms and we start heading towards 2024. I think we have a constitutional crisis on our hands. I think we start getting political risk in the US. I think that's what cracks the dollar.
that's the $64 question, right? The argument was '08 was a private debt bubble. This is a public and government debt bubble. And then so it can continue is the argument. It's not my view, but it was the argument that this time is different than 2008.
So it's a very similar bubble, I think, to what you saw in Europe. So I was referencing, Mario Draghi, whatever it takes.
Right. When it's serious, right.
Right. So that was more of a public debt bubble as well. So I'm talking about, 2011 going into 12 and the like.
MF Global, they took out, what's his name, Corzine.
Well, of course, right. I mean, that's another kind of sideline of this. Talk about a margin call, and then you decide, oh, I'll use my client money, to pay up for when these Portuguese bonds are now at 18%. That's a whole nother story, right? But that's exactly the sort of things that happen when you get a margin call. You say, there's this client money over here. Maybe I'll just use that.
No one will notice.
No one will. Who will notice? Who will notice? But that was much more of like a public debt problem. And the ability we still had then in 11 and 12 was for central banks to say, whatever it takes.
Right, we got this.
Whatever it takes. And today you don't have those degrees of freedom.
No way.
Today you have every central bank acting, it's every man for himself. Right? You heard the White House say, no, we're okay. We're okay with the dollar where it is. Did you see this? Did you see this? Where they said, yeah, do we need a new Plaza Accord? No. Good. I think we're good.
Janet's like, I don't see any problems.
Oh my God. Right? Right? And they're right unless we have
a problem.
A political problem in the US where we have one party that won't accept the other party's victory as legitimate, right, and the other party won't accept the other candidate's victory as legitimate. And Chris, that is where we are. We've got more than 70% of Republicans who believe that Democrats are a threat to democracy, an existential threat to democracy. And we've got an even higher percentage of Democrats who think that Republicans are an existential threat to American democracy.
My question is that did the Fed enable this by papering over all the problems of Wyden? In other words, the political instability was facilitated by the fact that the Fed would bail out any problem. And so people could go either further right or further left, knowing that.
I think certainly that wealth inequality was driven by this. I think that's exactly right. So was it Steve Eisman? Right, this is a great quote, right? QE is monetary policy for rich people. So, and that's what that graph you were talking about that I published earlier,
that was so great.
Talking about, right? So, So yes, right. I think that us being richer than our economy has grown has driven political polarization, has driven wealth inequality, has driven financialization of our economy, and has driven
confirmation bias part of that too. Or in other words, you have to be an extreme or confirmed in your opinion and no one can shake you.
Well, on the political polarization side, what I really think is happening here is that we've developed a bit, and this is a separate train of thought that I write a lot about.
Right.
But in the same way that you weaponize viruses, right? You do gain of function research, so you do DNA manipulation on a virus and make it do something it couldn't do before. We do the same thing with our words. So our narratives, our stories are intentionally weaponized. It's through word choice, the grammar of how we say something in social media through a microphone and the like. It's this three-headed monster, right, of big tech, which makes money through engagement, big media, which wants the polarization and the conflict, and big politics, meaning the Democrats, the DNC, and the RNC. They love this shit, right? Because it cements. It's an obedience collar for everyone on their half of the spectrum. And so what you end up with is the center does not hold.
Right.
Both sides get pushed to their respective sides. Neither side accepts the other as a legitimate, elected official. And that is the end of this. That's the end of the dollar. And so I'm trying to think out not 2 months from now, but 2 years from now. Because right now the dollar keeps everything from just totally cracking up. But if the dollar cracks, Katie bar the door, man.
Yep.
And the real challenge in thinking about this for a trader is, all right, I can imagine kind of the trade to put on here. How do I get paid? Who's going to pay me?
Have you seen the price of physical coins on eBay versus the spot paper price lately?
This is what I'm saying, Chris. This is what I'm saying. And if it goes too far, then to hell with gold or
Right.
Bitcoin. I want to own ammo and seeds.
Yeah, like the
Right.
preppers do. Hey, you wrote about this all during the previous election as we were coming up to the presidential election. You were talking about that. That was so good. You were saying that this was going to happen and we're not going back and it's forever changed.
It's not an aberration. It's an equilibrium. Right. That's my new line using $10 words.
I like that. Right. Yeah.
It's not an aberration. It's not a mean reverting phenomenon. It's an equilibrium. And, all of us who are on this webinar have been around the block to know what I mean by that. It doesn't mean revert. This is the new normal, right? This is an equilibrium. And that's what I'm spending my time right now trying to figure it out. Right?
The dollar.
How do I get paid?
The dollar goes, and the whole collateral chain is over, and then it's back to, like you say, like I'm coming to.
You're going to come to my farm.
I was going to say,
come to the farm, but I've got a little arsenal there. So anyway, I'd let you in, Chris.
Can you drink the water?
That's the most important thing, Chris. Is to have a source of fresh water, right? So I live on Little River Farm, Yeah.
So to people who are watching, Ben lives on a feeder river to the large reservoir that supplies most of Fairfield County. And so I would suspect that you could drink the water from Ben's.
Yes, indeed. I just gotta, set it up so I can protect myself from the roving motorcycle gangs. That's that's the challenge.
They're all on Ducatis. Obviously everybody's looking at the dollar, right? I mean, and
I can't believe I'm saying this, Chris. I really can't believe I'm saying this, but what works in that environment? It is Bitcoin. I can't believe I'm saying this. I can't believe I'm saying this.
As long as the power remains on, right?
Yeah. So look, but if we're plunged into civil war, then like I say, I want ammo and seeds.
Right.
I mean, that's the new currency. I mean,
heirlooms.
But I'm thinking about something short of that, right? Something where the US dollar cracks. We've got real chaos in the financial system.
Yeah, the collateral chain shortens when the dollar cracks, and then it's just a question of how far down the hole you go.
And crazily enough, right? I mean, again, I can't believe I'm saying it, but I think Bitcoin really works there. Just saying.
I know that's so not you, Ben. That's so
I know that is so not me.
that is so not
That is
you.
so not me.
Right? Like
But
everybody listening.
but what is it going to be? I mean, what are they going to go Swiss francs? I
I
mean,
don't know. I don't know. I mean, I mean, we can cross that bridge when we get to it. I guess what would be the
we can,
bleeding
but
edge?
what we can't get credit defaults. I mean, you can get credit default swaps, of course, on the U.S. government, but that's a chicken shit way to play this, right?
Right.
Again, it leads to the question. Well, how do you get paid?
Right. I mean,
Right?
what's the winning position? Cash and crypto. It's like Jesus, Ben. That's not,
I know. Well,
so,
cash. I'm not so sure because it's am I holding Confederate dollars? I mean,
oh, right.
this is the problem.
I mean, what do you just buy? You buy the lira or something? The Turkish lira just
Well, no,
goes.
that's what I'm saying. I mean, we're going to do Swiss francs?
Right.
I
Right.
don't
Like,
know. I don't know. I don't know.
so everybody watching, we've arrived at the place where we don't know anymore. And so
It's the best place.
the best place.
Stunned into submission.
No,
I
no,
do
no,
that.
not
I do
stunned.
that to people.
I'm suggesting that people here who are traders have got to get up tomorrow and they have to, be in sync. Be in
Yep.
sync, right? In other words, so having a large macro structural background at least helps you be in step with the foreground relative to the background.
Right on, brother.
Right?
Right on. So look, this is what we do. So I mean, I try to analyze the narrative patterns, right? So every day we take in everything that's published in the English language around the world, every piece of financial news, and then analyze it for they're called n-grams, again, these $10 words, but it's basically looking at these libraries of words to look for the patterns of what people are talking about, and then trying to translate that into not a 2-year position, right? Not some super trend, but what's the narrative for the next 30 days? Right? We call it narrative ARB. Right? It's not stat ARB, it's narrative ARB. It's unstructured data and
Hey,
looking for
what's the time lag? What's the time lag between when it hits your screens and it actually has an impact?
So let's say the alpha decay here, it's these are typically trades you can put on for 30, 45 days. Right. So it doesn't, it's a pretty stable thing, right? I mean, and what you're looking for either to set it up or to take it off is, it's typically Z-score this stuff. So you're looking for stuff that's out of the ordinary. But there's some things like our big macro debates. Is the Fed hawkish? Should the Fed be hawkish? Which is actually more influential on pricing and stuff than descriptive. The prescriptive narrative is often more impactful than the descriptive narrative. But for all this stuff, what we're seeing is right now, there's a narrative bid for equities. There is. It's small, but it's there.
I mean, you see it in the VIX. You see it in the VIX as though people are selling premium, especially with the VIX elevated. And if there's a narrative that supports that, then I mean, it's probably the best return for your cash you can get.
We saw the narrative go pretty positive on crude and gasoline about 2 weeks ago, right? So that's probably who knows what will happen with the narrative, but that's probably got a little more to run.
Have the narrative sort of like lifespans shortened with the entertainment edits getting shorter and shorter and shorter?
The transition, it has gotten shorter over the last few months, but it's not a secular thing, right? So yeah, yes, the kind of flipping from stem to stern, and let's call it the vol of narrative,
Right.
has gone up.
Right.
Has gone up significantly over the last 3 or 4 months.
Oh, it must be reflective in the markets. If the markets have no, like Einhorn saying value investing is dead, well, welcome to the momentum chasing world, Mr. Einhorn, when you have intra-quarter volatility at all-time highs because real rates are nego. So
it's definitely a transition period, right? Because leverage is being repriced globally.
so
I
that
mean,
means, right, that, so
and
that
we've got a
means,
freaking wrecking ball of currencies and interest rates out there. It's a wrecking ball.
right,
And
so
you've got liquidity squeezes of people who shouldn't be squeezed, like freaking pension funds,
funds,
and yet they are.
can you imagine Thanksgiving at the pension fund house is going to be a bummer.
Some of my best friends are pension fund managers. I mean that seriously, right?
Yeah.
And it's
Or the charitable chairmans and things like that.
say every foundation, every family office, every endowment, they're all going through this. And it's the big question is, are we in a new regime where we have to do something that completely replaces our 60-40 approach, a negative correlation between stocks and bonds,
Funds.
right? Or is this a new regime, or do we end up kind of in a continuing? Is this a blip? And I don't know the answer.
I don't either. Nobody
Chris,
knows. Nobody knows. You look at the markets; there's got 5% swings every other day. So it must be the outcome is so dramatically opposed that.
Well, I mean, the last time I remember this was I remember it was a week in 09 where
I remember it was
right where we went down 4%, up 4%,
up 10% in an hour.
Right. So we had a 17% path, right, to end up right where we started on Friday. I mean, I'll never forget that. I mean, my God, right? So it's not that pronounced, but it's the same general idea. So look, I can imagine that we have a recession that's so brutal and so abysmal that it in a housing price collapse of nationwide housing price collapse that rivals 2008.
Right.
I can imagine that happening and wringing out every bit of inflationary expectation that exists in every PepsiCo purchasing manager and every Indeed.com hiring manager.
Every piece of leverage, excess leverage, gets
right.
wrung out.
I could see it just all get wrung out,
right.
And it's. I mean, oh my God, it's going to be brutal. But I could see.
And the balance sheet,
remains
the same. Right.
Right. Then we go right back to where we were in 2013, 14, 15, where it's the central bank saying, "Oh, we're going to lower interest rates." I could see it happening.
Who comes after Powell?
I mean,
are you up for the job, Ben?
No. It's I'm blanking on his name. Jim, the guy who was the bow tie, the Bond guy.
Jim Grant.
Jim Grant, right?
Would be great. Jim Grant could run for president if he wanted.
Well, Jim Grant, this was always his line, right? We said, well, what would you do if you were Fed chairman? And his line always is, I'd resign, right? Which is just a great job, right? I'd resign, right? So, yeah.
Yeah. And then, how about you? Will you ever run for office?
I think we've talked about this. At some point I was thinking, well,
might as well,
right? Do something, but no.
Okay, just so we're clear on this, everybody. The answer is no,
right.
and so we can set that.
No, I want to build my own pack. Just we don't need to.
Hey, so what do we get?
I want to do stuff from the bottom up, not the top down.
What do we get if we join the pack? What do we get? What's in the pack? How many people?
Wait. So there's the Epsilon theory pack, which is our merry little band, right? Which is it's crazy, right, Chris? So I started writing these notes
a long time ago.
Coming up on 10 years.
Yeah,
is 2013, and I was just sending out these notes to like 100 clients, friends.
They made them around. They made them around the floor in printed form. It's
crazy. It just started spreading. It's totally word of mouth and people handing them around.
We'd never seen anything like it. It was so weird.
And so we now it's like 120,000 people on that group. And, we've got about 3,000 paid subscribers. And so, keeps the lights on for the publishing effort that we do here. But the bigger thing, Chris, is it doesn't have to be the Epsilon theory pack, right? But you've got to find your own pack. What I mean by a pack, I hope, most people can find it in their family, some can't, but you've got to find it somewhere. And what a pack is people who treat you as an autonomous human being, right? Who do not treat you as a means to an end. And I'm telling you right now, that pack, it ain't your company and it ain't your political party. So you've got to find that group of people who treat you as a human being and who demand that you treat them the same way.
Even with somewhat differing in opinions. In other words, you always have heard the
especially with different opinions.
Right, because people are just like, when you're looking for advice, you're just looking for an accomplice, or does this person collude with my ego? And from what I gather, the pack is not that.
Not that. No. It's the best line out there. It's the tagline from Friday Night Lights, which is, for those of you, I think most people watch this are aware of it, but Friday Night Lights was a great book, an okay movie, and a great TV show. And it's about high school football in a little Texas town, which is to say it's about life, right? And the tagline for Friday Night Lights is clear eyes, full hearts, can't lose. And that is so right? You need to see the world with clear eyes, but you got to have full hearts. And that means treating other people as a real human being, not as somebody to win an argument with, not as somebody to use for their money or their vote, but as a real human being. And if you find other people like that, you really can't lose. It's how you get through the storms we're having today and the storms we may have in the future. You got to find your path.
I'm curious about the ethical path of the future. Do you think the ethics will remain the same as they are now, or will they change? Tough question. I was listening to a monk from MIT talking about that.
I don't think it's tough at all, right? So I think that my faith, right, is still the small L liberalism of autonomy, especially an autonomy of mind, of liberty, and also the small c conservatism of family, of people who came before us and working for the people who are coming after us. Right? I think those things are absolutely timeless. I think those are the old songs that get drowned out by the new. But as long as I'm writing, right, and so I just want to, we're going to raise a glass to the old songs of an autonomy of mind and being true to your pack. So
in a virtual world, it's hard to find. It's literally like you have to look someone in the eye, I would suggest, or your life where you're close to the land.
Yeah, I don't know. I mean,
you think you can do it virtually, find your own pack?
Well, here's what I mean by how, and I'm not a religious guy at all, right? But I'm going to use this word blessing, right? Because it's been a real blessing in my life to start writing and to meet people who I never, or maybe probably would never have met otherwise. Like you, Chris, right? Right?
Yeah.
And so, when we first met, we've run into each other, and Connecticut, we live with this, but we really met online, right? Through you reading what I was writing. And, so, and again, $10 word alert, an epistemic community, a community of minds is really possible today in a way that I don't know has ever been possible in human history. And so what I've learned, and it is the thing that keeps me going, is that I am not alone. And neither are you, Chris, and neither is anybody listening to this. You are not alone.
You're part of
And
our pack here today.
you're part of the Chris Cady pack right here today, for
And the
sure. Misfit.
The Ben Hunt pack.
Right on, brother.
For sure. That will give heart to a lot of people, because a lot of traders have a very lonely life looking at the screen. You know,
it's very, and everyone again listening knows what I'm talking about. It ages you in dog years. Right? It does. It ages you in dog years. And that's a physical toll, but the even greater toll is that you're not present with the people who love you and you love them. Right? That's the even bigger toll that this kind of life can take on you. That you're always got something like, I wonder what's happening with JGBs or whatever it is. Right? And it creates a distance, a shadow, so that you're not present with your kids or your partner or your friends, whoever it is. And it is a hard life, and it is alienating in that true sense of the word, where you become a stranger, an alien, even to the people who you care about the most. And that's why I keep coming back to finding your pack and not letting anything get between you and that, not even this, fun thing we do called trading, because it is fun, right? There's a juice and there's an energy to it that, it's the biggest game in the world.
against the smartest people.
Absolutely.
And they don't care, right? It's like Betsy Pratt. There was an old woman who owned Mad River Glen, which is a cooperative ski area in northern Vermont. It has no snowmaking. It's really crusty little place. And she always said it's not the mountain's job to make sure you have a good time.
Right on.
Right on.
That's a good line.
Right. And so for traders, it's not the market's job to ensure that we have a good time, sort of thing. And you're right. It's an incredible game, right? We have to dance with the girl that brought us, and that's the market. And so, hey, so how do people join your pack, the Epsilon Theory pack?
I'm Epsilon Theory everywhere, right? So it's at Epsilon Theory on Twitter. It's epsilontheory.com.
Be aware, people, if you join
check it out.
It's smart in that group. So be careful before you mouth off in that crowd.
Full hearts, man. Everyone is welcome.
Full hearts, right? And Ben's not running for office as we would all wish him to do. If you were to, where would you start?
Oh, I'd do something with state government. I think what ruins people is they
a large
start thinking of the big stuff. It becomes an ego thing. The bigger the constituency, the more that old siren song of egos takes over.
And for everybody watching, let's just give them a rundown of what's on the farm right now. What are the animals in the house?
Well, my favorite animals are the goats. So we've got 4 goats, and they're just, by the way, all my animals are essentially, I call them like mobile artwork, right? I mean, we've got some animals that pay rent, meaning the chickens pay rent, the sheep pay rent, although our wool is not very good. The bees pay rent. So I like the animals that pay the rent, but goats don't pay rent, and they're just fun. They're wonderful. So we've got chickens, sheep, goats, bees, just one horse right now. We've had a couple of horses, but just got one right now. Dogs, cats, the usual.
Children.
Smaller animals. Yeah, children.
Teenagers.
That's the problem for us. So all 4 of my girls now have kind of, flown the coop. So there's no one left to kind of take care of the animals. It's just down to my wife and myself. So
wow, that's a big piece of work. Hey, there was this Jake Burton. He started snowboarding, or him and Tom Sims. Anyway, he was the godfather of snowboarding. He had a house in Vermont, and every year at his big farm in Vermont, he would throw a party, and everybody was welcome to come. And I had a house down at Campo, and I always threw big parties on the night of the fireworks, right? Everybody was I had them captured at the beach. So I was like, might as well serve them beer. Any thoughts of a big party in the fall up there sometime? Not this
Yeah,
year.
so actually, so we had these pack gatherings, right?
Oh,
So
you
we had one
do?
at my partner's house. We had a big barbecue. We're definitely gearing up to do more of that. We're actually going to try to get a national get together in Nashville
Really?
next next late spring. So right after Memorial Day,
I will
we're
come
gonna
for that.
we're right on. Yeah.
I will
So
come.
anyway, we'll be publishing some more info on that, and we'll try to get a couple hundred people down to Nashville and hang out and talk about the world.
What's your take on the midterms, or do they not matter?
It's just polarization as far as the eye can
Can
see.
see, right? Yeah.
I think that it's just gearing up for a 2024 election where neither side will accept the other side
Right.
as a legitimate winner.
Great advice on making sure that you don't let the markets interfere with the relationships that you have with people that are so important.
It's the biggest occupational hazard of what we're doing. And just
The markets will always be there,
find
right?
your pack. Yeah,
Right. And the people may
it's not
not.
worth it.
Yeah, it's
That's right.
not worth it, right? It's not worth it. Um, Tell Hannah I say hi. Everybody, thank you for coming. Um, that's Ben Hunt. Be part of his pack. And
Thanks for having me, Chris. This was a blast.
yeah,
Thank you.
see you on the road.